Sometimes you face difficulties not because you're doing something wrong, but because you're doing something right. Welcome to the daily review of April 24th and the preview of April 25th. This is Huskins, your Forex mentor, with your daily dose of events that shape the Forex market. Today I'm going to do something very unique. I'm going to share with you my trading philosophy when I'm actually going to enter into a trade. This we'll do via the New Zealand interest rate trade. Let me pull that up really quick. So the trade plan was to wait 5 minutes after the New Zealand announces its interest rate, and if there is no change, basically follow the 5-minute candle. So this particular, on a naked trade plan, you'd say you'd want to buy at this particular price of 8445 is or 8444 is where you would want to actually buy the New Zealand US dollar. But you need to also look at a few other events which I've done, wherein I talk about the average true range and how you can use the average true range to think about where to put your stop loss and where to put your take profit levels. So let me pull up the average true range on this. Say insert add indicator, and you double click on the average true range, and what I do is I use the 21. Why do I use 21? Because on a daily chart, I'll change this to a daily chart, 1 day, and on a daily chart, average true range of 21 gives me 1 month's average. Alright, so now the average which we're looking at yesterday was about 76 pips. So you need to bear that in mind, that 76 is what you want to be looking at on an average, the movement on New Zealand US dollar. So now, how would you go about trading this? There are two ways of looking at it. One is if you expect the low of the day to be this, alright? If you expect the low to be out here for the next 24 hours, so you'd have 8359 plus 76. So let us add 8359 and 76. 8359 plus 76 is equal to 8435. So you draw another line at 8435 where you are expecting the high for the day. Alright, and now when the news comes out, you've already reached the high for the day. So if that's the way you're going to expect the market to go ahead, there would be a no trade, because you've already there is no place for your target. You've already surpassed your target level. That's number one. A more aggressive method of getting into this exact same trade is that you look at lows in the session before you had the news release come out. So which session would that be? That would be the New York session. So what was the lows during that time? Out here. So now you expect the lows of 0.8387 to hold, and if that is the case, what you would do is you would add 8387 plus 76, which is the average true range, and that amounts to 8463. Now this is what you are thinking. You're thinking that the low of the day is expected to be 0.8387. The expected high for the day is 0.8463. Now, how do I? Yes, I need to buy at the trade plan asks me to buy at at the close of the 5-minute candle. But if I buy right here, I'd have maybe 15 pips of a target and 60 pip stop loss. That is not a good target to stop loss criteria. So what you could do is you could wait for a retracement. So you divide 76 divide by 2 is equal to 38. So from the expected high of the day, which will be out here at 0.8464, you minus 38, which will be 8426. So now the way you would trade this is you would expect the market to come down to 8426 around here. You would have your stop loss below these lows because these are the low expected for the day based on the average true range, and you would enter here and hit your take profit. That's another method. Now if you want to be even more aggressive than that, we looked at the low for the previous session, previous 2 sessions. We looked at the low of the previous session. Alright, if you want to be even more aggressive than that, you would definitely want to have your stop loss below the pre-release price at 8328. And you'd then add 76 from the low of 8392, and that is what your target would be. So here we go, 8392 plus 76. It would be 8468. Okay, the same drill. You cannot enter in out here and want a stop out here. You'd expect it to retrace to at least give you a 50-50 level, and in this particular case you would have entered at 20. So in 3 different scenarios, depending on what your own aggressive, how aggressive you are. If you are a very conservative trader who wants to take just the best of the best trades and not get into the market, maybe you take 3, 4, 5 trades per month, then you would have a no trade. If you were aggressive with this expected as the low of the day, you would be able to make your 1:1 pretty easily. Similarly, if you even had if you even expected the 5 o'clock low of the day to hold, the trade plan which said to buy after the 5-minute candle, you need to look at it in perspective of the total market movement available based on the average true range. Now for the subscribers only, I have the entire webinar which I had dedicated to only average true range. I have that in the member resources. If you've not seen that, please go ahead and have a look at the video. I spent about an hour discussing just the average true range and how you use the average true range to make your trading better and inculcate that into your trade plan. Apart from that, we have our US durable goods sales, which we are still in the trade. Now, the Twitter's hoax reveals financial market vulnerability. What do I mean by that? Basically, there was a false report of explosions in the White House injuring President Barack Obama. This sent stock prices plunging and triggered a significant but temporary loss on markets for stocks, bonds, commodities, and currencies. The incident demonstrated the vulnerability of the financial system to dramatic news accounts, including false ones. Now, the Associated Press said its Twitter account had been hacked and quickly corrected the report. The SEC is looking into the incident. So let us see. This is what happened. But let us pull up a 5-minute chart to show you this particular event. US dollar 5-minute. What? Sorry, this is not the US dollar. This is the US 30. This is the Dow Jones. It plunged down and went back up. Let's see what happened to gold prices. Gold did not do much. So I just want you to be aware of which are the instruments which are vulnerable to hoaxes and news. So let us see what happened to gold. You say display in the area below, and let it load. You see, when the Dow was plunging, the gold was that's nothing, and it did not even beat a higher it did not do anything, because the gold market appears now to be a lot more mature, and the Dow market is appears now to be heavily infested with market managers and hedge funds, because this kind of sudden movement is caused by hundreds of millions of dollars of transactions, and which would not have happened in case it wasn't for these big hedge funds going around selling. Now, this has revealed something very interesting to us, where it has revealed who is behind who is the one who holding the instruments in the markets. With the gold, we have more mature seasoned players holding it, who are not very well leveraged. That means they are very well set. They do not have to jump the gun in case they get any news. But for the Dow, any news which happens, they're going to jump the gun. Having said that, I do not expect the Dow to fall anytime soon. But we have just unveiled that the Dow is right now going up on gas. It's not going up on real profits. This would not have happened if it was real profits. Now, US sees increase in new home sales. Now, sales of new houses reached 417,000 last month, which is an increase of 1.5% compared to February and an 18.5% gain compared to March 2012. The median price was 247,000, which is up 3% compared to March 2012. Now, this is from the durable goods which we had today at 8:30. Orders for US durable goods fell in March by the most in 7 months, as demand slumped for commercial aircrafts and business investments cooled. Bookings for goods meant to last three years decreased. Basically, durable goods is goods which last for more than 3 years. Now, these bookings decreased at least 5.7% after the revised 4.3% gain from the prior month. So people are not buying durable goods. Now, New Zealand's official cash rate was unchanged at 2.5%. Now, the Reserve Bank uh, basically said the outlook for monetary policy remains consistent with with what was described in the March monetary policy statement. Despite continued strains in Europe and disappointing data in some countries, most recently, global financial market sentiment remains buoyant, and the medium term outlook for the New Zealand's overall trading partner GDP growth remains firm. Growth in the New Zealand economy has picked up. So people are didn't I talk to you about what happened with the G20 summit? Uh, the consensus was that the market has um, needs more positivity in the market, that the fundamentals are pretty okay, just that market confidence is missing. That's exactly what was concluded in the G20 meeting, and now you can see the same thing proliferate through the press releases of the central banks of different countries. They are going to talk in a more positive note. Now let's preview for tomorrow. Tomorrow we'll have the UK GDP report. Now this is the report which will be trading, and it carries much more weight than the second or the final report. And of course we have our initial jobless claim, so that's something which will be trading, and I'll be trading perhaps both of them. Thank you so much for watching. Have a wonderful day. Thanks and bye for now.